Hey, what's going on, everybody? Welcome back to the next video here. Um, so today, well, I guess so for this video, we're going to be going over how to basically the process of getting a brokerage set up for you, as well as like how to like navigate your brokerage account and as well as like place trades and things. So this one might be a little bit of a longer video. Um, so hopefully you don't get too bored here. But yeah, so just want to recap. So I think we're to the point where you should be comfortable enough to at least get the process started on getting a brokerage account set up. Um, So, just a little recap. We've gone through investment objective. We've gone through investment philosophy. Well, I guess we can kind of do like a little recap. So, investment objective. So, what is the objective of your investment? What is the goal that you are trying to reach from these investments? And then we've gone through investment philosophy. So, you know, after going through that video and doing your own research, maybe you have a better understanding of what an investment philosophy is. And now maybe you even have your own investment philosophy. So like your understanding of how people people behave and like the psychology of the markets and things of that nature. So, you know, if you don't have an investment philosophy yet, I would suggest maybe trying to find one that fits your kind of character, I guess. Excuse me. But yeah, so I would say if you haven't figured out these two yet, maybe you should figure those out before you open up your brokerage account. But yeah, so and then your investment strategy. So applying your investment philosophy and objective, creating a strategy, and um, uh, being able to be adaptive and being able to change your strategy over time is also important. So, you know, you might have a strategy now that works, and then eventually it stops working. So then you have to be able to change your strategy to where it works with the current environment. And, you know, I wouldn't, I would also say, like, if being aware of like trends or like hype, I guess, like being aware of companies that are being hyped up, I would say is a good thing because then, maybe maybe you find an opportunity there and you can capitalize on the opportunity or, maybe you want to steer clear from companies like that. So anyway, so yeah, so investment strategy, so how you're going to apply your objective and philosophy. And then investment universe, the how we talked about like the different exchanges. So yeah, the United States stock, or I guess the New York Stock Exchange, and then also the Nasdaq for the United States, and then like for China, you have the Nikkei Nikkei 225, I think is what it is. And like Japan is maybe Japan is Nikkei, and then I don't know. I know China's is like Hong Kong and some other things. But yeah, so just being aware that some companies are listed on different exchanges, and also being aware that like if you were to invest in a company on another exchange, you might have to pay like some type of fee or there might be some more underlying variables there compared to just buying like things that are listed on the United States stock exchanges. So um yeah. And then risk factors and risk management and controls kind of go together here. So, risk factors, being aware of what's going on in the market, being aware of current events, being aware of economic trends, being aware of just being aware of your surroundings, really. How I talked about, that second level thinking. If you want to be a successful investor, you have to be on that second level thinking. You've got to can't just take everything for what is. Like you can't take everything as it seems. You got to look deeper into the picture. So, and then we also talked a little bit about position size limits and then diversification in that video. So, like going into this, constructing your, well, I guess we're opening up your brokerage, so we'll be applying those things. Um, but yeah, so what I did here was opened up a few. Am I still recording? Yeah. Opened up a few different. Um, it logged me out here. I'm gonna pause real quick and okay. Um, is it recording? Oh, it's not showing my camera now. All right. Well, I think we lost access to my camera. That's okay. Um, but yeah. So I don't know if that even does anything. Sorry. So yeah. So back to what I was saying. Shoot. Wonder if I can trim. Whatever. I don't care if you guys see how much money I have. Yeah, okay. Yeah, whatever. Um, so yeah, so I opened up three different brokerages that are out there that you can use to invest. And so basically what I want to do with this video is just kind of based like give give you a little bit of knowledge of like how to open up a brokerage and then also like how to navigate and then like trade on your account as well and things of that nature and like adding funds to your account, things of that nature. So anyway, so picking a brokerage, there are so many brokerages that you can choose from. So like Weevil, Charles Schwab, I would not do NerdWallet, Fidelity, um, SoFi, like I think you can at least, yeah. SoFi, E-Trade, like there's so many you can choose from. I'm not gonna sit here and tell you that one's better than another because I mean, at the end of the day, it comes down to personal preference. Whatever you're able to navigate best, I would say, would be your best thing to do. But anyway, so like what you would do, we'll say that you chose Weevil, whatever, don't care. So you would go to the Weevil website and click sign up. After I hit accept, I'll sign up. You'll enter your phone number. Basically, just fill out everything that comes here. Um, and then it may take like a couple business days. I don't know what the time frame is nowadays, but it may take like a couple business days for your account to get verified and everything before you can start trading. So don't be surprised when that happens. Most of the time, whenever you do open up an account, they'll they'll have you link a bank account or like a debit card to the account so that you can go ahead and start a transfer of funds to be able to trade once your account is verified. So that would be one way to add funds to your account. But I'll show you on Robinhood, Chase, and Vanguard of like how to like navigate these things. So if you go with one of these three, this video would be pretty helpful if you're brand new to this. If you choose something else, the same thing applies. Like you'll see that literally it's all the same. It's just different UI is literally the difference. It's the same information. I mean, but anyway, okay. So let's say that you have a Robinhood account and you want to add money to your account or withdraw money as well. So this is on PC. It may look different on your phone, but basically there should be you should be able to click like your profile or like your account, and then what you would do is then go to transfers. Then if you want to deposit money into your brokerage account, you would deposit it. If you want to withdraw money from it, you would hit withdraw. Simple as that. And once you have money in your account, what you would then do is so this is how I would go about it. So what I would do is use from my first video that I made, I would use the Morningstar Investing Center research tool. Like if you're brand new and just starting out, this is how I would go about it first. Like first off, so in these in your brokerage account, there's these things that we call watch lists. And basically all watch list is you add stocks or companies to a list that you know maybe you have an eye on this company. Um, maybe you have an eye on a company, but you don't want to buy it just yet. You think you might be able to get it at a cheaper price, or you know maybe you want to wait. Maybe they have earnings next week, and you just want to wait and see what the earnings are like. You know, things of that nature. You can make a watch list and then add that company to a watch list. So let's say say we want to keep an eye on Tencent. So what you do is you can even type in like Tencent, but you can add to list and click the list that you want to add it to and then save changes. And then whenever you go to your dashboard, now Tencent is on my watch list. Um, so basically what I was getting to is I would go to this I would go through the first video again, use the Morningstar screener, and basically just and you know what, we'll even do like a short little like stock analysis, or at least the way that I go about things. We'll do a little analysis here together just so you can like see how I go about it, and then you can apply it to the rest of the companies that you may be interested in to the okay, but anyway, so use the screener to then create a watch list on your brokerage account is where I'm trying to get to. I'm sorry. Um, but yeah, so use the screener first and then create a watch list of companies that you might be interested in. Using like the techniques from the first video. So 5 and 4 star, if that's how you want to go. If you want to go just 5 star, that's cool. Um, Once again, if you buy in at a cheaper price, you know, I feel more comfortable buying in at a cheaper price than I would if I were to buy in at a high price because I'm more susceptible to risk if I buy in at a higher price than if I were to buy in when the stock is down like 30% within the past year. Um, so 4 and 5 stars, that will give us the stocks that have been getting beat down from their intrinsic value. And then wide and narrow modes. So going back to the castles, what all things does the business have to protect the company, basically? What all what all paths do they have of making income? And then your exchange country, just to make it easy for you, United States. So this is what I do first. Go to the screener, screen your companies. You can play around with it if you want. I usually filter it by sector because then that helps with a little bit with diversification if I wanted to really diversify. Um, let's do this. Let's do 5 star wide narrow mode just to narrow it down a little more. So we got consumer cyclical, consumer defensive, and like if you don't know what like if you don't know what this is, so like it's just natural to me now. Like I see consumer cyclical, I have companies in my mind. But like, if you don't know what a consumer cyclical is, you can literally look up like what is consumer cyclical, and it'll tell you, and like what's consumer defensive, and it will tell you what's financial sector. It will tell you about the financial sector. That wouldn't be a bad thing to know. Um, and then like the industry, but I feel like it's. I mean, to me, it's self-explanatory. It may not be self-explanatory to everybody, but to me, it is. So I'm sorry if I'm not explaining this all too well. And I'm pretty sure we went over like the small and the mid and the large in the first video. At least we talked about the little uh, chart whenever you click on a company. Um, and once again, like if you want to know more about that stuff, like just research it. Like the best thing that you can do is do your own research because I feel like you learn a lot more. Like all I'm doing is just like pointing you to the right path. And then I just want you to go off by yourself and do your own research and just, you know, understand what you can understand. And like, if you have questions, like just do more research, you know. It's really, um, like, I feel like that's the best practice when it comes to this type of stuff. But okay, let's look at Duolingo because I was looking at Duolingo earlier. So this is gonna be like we're gonna do like an analysis. I can't speak. Sign me out again, darn it. Whatever, it's fine. We're gonna do like an analysis on Duolingo together. So I'm just gonna like kind of run through it of like how I go about thinking of things. So Duolingo, small growth, cool. Technology application, cool. PE 22.69, not too bad. No div. U range, fair value, 16% discount, not bad. 5 star buy, we like that. Um, Yeah, year range, 544 high. It's super low from its year range. So like year range, so like it'll tell you like the low of the year and then the high of the year. And then like this little black dot is like where it's at currently. So like if it was at $300 a share, the black dot would be like right here probably, or like somewhere around here. But right now it's at 180 a share, so it's at like the lowest it's been in the past year. Um, And then PE we went over in the first video. We went over that in the first video. So yeah, I shouldn't really have to explain anything there. Sometimes I look at this, sometimes I don't. So yeah, that's unfortunate. So Duolingo just listed on the stock exchange back in 2021. So there's not much data here to really work with, but it's not the worst thing. Um, and that also means that like there's not that much data for them to calculate the fair value. So I'm not really sure if I would trust that fair value assessment or not. Yeah. But let's just look at the financials. Wow. Okay. Um, yeah, so it only goes, holy moly. Okay. Wow. So this is crazy revenue growth with really nice gross profits and crazy net income growth. Holy cow. Okay. So like I always look at the revenue growth profit and the net income on the income statement. And holy moly, like you don't see this very often where it's like the revenue is literally doubling every year. So like doubled, double, well, not really doubled, but still significant, significant, significant. Like that is crazy. Wow. Um, and then like gross profits, if you can find a company that's 70% gross profits and steady revenue growth and steady net income growth, we like that. We take those. Um, Super low debt to equity. That is lovely. You love to see that. Free cash flow. Oh my gosh. Okay. Um, okay. So from the financials, from the financials, I'm buying this tomorrow. From the financials, I'm buying this tomorrow. That's the best way I can explain it. Because so the stock price is the same it was in 2024, but now we're making we brought in 964 million in revenue, which was a 40% increase year over year, 72% profit margins, and 386 million in net income, which was a 40%. Oh, that's more than 40. Basic EPS times four, 93 million in debt with 1 billion in equity, a return on invested capital of 30%. You can literally see them improving the ROIC. That's good. That like this could be either a trap or this might be one of the best deals out there on the market right now. So okay. So when you get in a situation when you get in a situation like this, basically what you have to do is you have to go look at the 10Q or the 10K and look at the MD&A. November 6th. Yeah, this is the one we want. So when you find something like that, so there has to be an underlying reason why the stock price went from $500 all the way to 180. Because if we were to base it straight off of the financials, the stock price should be out no less than $300 a share, just based off the financials. Like their fair market value is what, 217? Okay. Anyway, so this is what I do in this situation. I'm trying to figure out maybe what the underlying factor was for this drop because November 6th. So where's November? Yeah, November had a big drop. So there's something in this 10Q that will tell us why it had such a big drop. If had more monthly active users and more daily active users, more paid subscribers. Their subscriptions have been going up. Net income, okay. Operating metrics. Okay, so nothing bad yet. Nothing bad yet. Did they acquire a company? Okay, I still don't see anything bad yet. Okay, we've already seen that. I don't know why they're repeating things. Okay, so here's something. So, I intend to continue to invest additional resources in the infrastructure to expand the capabilities of the platform and allow the users to realize the full benefit of their products. The level of timing and relative investment in these areas could affect the cost of revenues in the future. So that's one thing there. another thing here with the gross profits and gross margins. So when revenues fluctuate, gross profits fluctuate. It makes sense. Thing is, they really didn't even spend that much on excuse me, they didn't even spend that much on R&D. So this is all kind of just like nonsense. I feel like so I'm gonna read that. Okay, where are we gonna actually talk about things? Because I do not see anything around here just yet. I mean, they've talked about a couple things so far, but I need to see like forecasts or like what their future outlook, what they say about that. I mean, I've already gone through all this. Okay, so their investments are safe. Yeah, I need to see more about this like subscriptions and stuff as well. Um, okay, so they did acquire some things for 26.5. Okay, here we go. So yeah, they did have a lot of safer, so the interest rate being cut will kind of deteriorate their gains there, but that's not that big of a deal. Foreign currency exchange risk, yeah. Inflation risk, I don't think inflation is really going to be that big of a deal. Limitations of financial control. So, I really did not see anything that screams that this stock should be down as much as it is. Unless there's something in here. Okay, so I was talking about forward-looking statements, but I don't see any forward-looking statements in this thing. I mean, we went through all of it. Pause, 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 pause. Okay. I mean, maybe I'm missing something here, but I don't see anything. I don't see anything. I mean, there's really no forward-looking statements, and there's no like, I don't know, they're not giving us anything. Um, yeah, I mean, I don't know. Like, that's how I would go about that. Yeah. Um, there's nothing that I see here that says that we should not buy this company. So, sorry that took so long. We're at 42 minutes already. Holy cow. Yeah, sorry, but I'm just like I'm doing a step-by-step guide of how I go about this. So the financials look good. 10Q and 10K. I didn't see anything that was setting off an alarm. I mean, assets decreased a lot, but so did liabilities. They did take on a little more debt, but equity increased. Yeah. So, and then cash and cash equivalents. I maybe there's some hidden things within here, the equity and the total assets and the liabilities. Maybe there's something there that I'm missing. I didn't see anything. Um, I I I would say this would be a company that you would add to your watch list. So Duolingo's ticker is Dual. So look that up, and then we add to list, save changes. Boom. Okay. Um, yeah, and then like if you look at it year to date, down 44% year to date from its highs. It's not gonna let me do that, I guess. Okay. Anyway, it's pretty far down from its highs as well. So yeah, I would add that to the watch list for sure. That's definitely something I would be interested in. Um, yeah. So let's say that we wanted to buy Duolingo. We wanted to add it to our portfolio. So this concept is going to be the same all across the board. So just pay attention. It's not that bad, I promise. So when you go to buy a stock, there's going to be an order type. So for your order type, there's different order types here. Your most basic order type is just going to be a buy order. You're just buying it on the spot. You can play with this stuff if you want, um, like limit orders or stop loss orders. Do your research, see what they are. I'm not going to go into it because I don't think it's really that necessary. But um, buy order, we want to buy the stock, buy in. So some brokerages will allow you to buy in dollar amount. Some brokerages, well, they'll let you buy in dollar amount and in shares, so you have a choice. Some brokerages, like for example, Vanguard, you can only buy in shares. You can't buy in a dollar amount unless it's unless it's a Vanguard ETF or mutual fund. You can only buy shares on Vanguard. Um, so yeah, so you could do either dollar amount or shares. This is where your allocation comes into play. So we thought that Duolingo was going to outperform our other stocks in our portfolio. Maybe we want to have our allocation heavier in Duolingo, so we want Duolingo to be like 10% of our portfolio or like 15% of the portfolio. So then if our account balance was $1,000, 15% of $1,000 is $150. So we'd buy $150 worth of Duolingo to be 15% weight of our $1,000 portfolio. And then you can do the math for if you have more money than that, and do the math for the allocation that you want. It's different, so it's a lot easier to allocate your funds when you can buy in dollar amounts than it is if you have to buy in shares. Because you have to buy in shares, then sometimes a stock price can be $900. You have to have $900 in order to buy that company. So that's just something to keep in mind. Um, Chase also allows you to buy in dollars as well as in shares. But anyway, um, so like, yeah, you'd enter that and then you'd review the order, whatever. That's on Robinhood. It can be a little bit different on other brokerages. So this is a good example because I can explain some things here to you. So here on Vanguard, we typed in Apple's ticker symbol. So it populates this. So what this is, so this is telling us that Apple stock is at $273.76 per share currently. That was as of 4 p.m. today, December 29th, 2025. Um, and then sometimes it will tell you like the percent change and then like the dollar amount change. Um, so here is where things can get kind of confusing, but it's really not that difficult. So a bid size. So when somebody wants to buy a stock, there is there's a thing that you can do that is called a limit order. So market order, you're buying the stock for the market price. The market price is this. So if I were to do a market order, I'm gonna buy one share for that much money. So there's bid and there's ask size as well as the market. price. So bid size is buyers putting in limit orders to try to buy the stock for a cheaper price than what the market price is. The ask size are sellers selling the stock for the lowest that they would go. So somebody's selling 200 or somebody's selling 100 shares of Apple for $273.63 per share. But the highest bidder is trying to buy 100 shares for $273.30. So that 33 cent there, the 33 cent difference, that's what we call a spread. So when spreads are when so the larger a spread is basically indicates that there's more volatility in that stock. There's something going on that's making the stock price more volatile. When the spreads are closer together within like cents or like 10 cents, when they're closer together, that means that, you know, people think that the stock price is fairly valued at that current time. When spreads are farther apart, people don't really know what the market hasn't really settled on what the fair price is. So the the market is the one that tells you what the price of a stock is. The market you can't like there's nothing you can do. The market decides what the stock price is. You don't decide what the stock price is. The market does. So basically, um, the higher the spread, the more risk you're kind of taking on there. So like the higher the spread, that's when I put in a limit order to try to catch it in the middle. Maybe somebody's selling in the middle there. Who knows? But if you just want the stock now and you don't care about, the penny crunching, then probably just do a market order. But then you have a limit order as well that you can use. So if I wanted to buy, let's say I wanted to buy Apple for 273 point, I don't know, 45 cents. 273.45. You put in that, that's what you would that so you have the order, you submit the order for that. It's not guaranteed that you'll get a share for that price because then maybe the bids and the ask start to increase a little bit. So the bid goes up to like 273.50, the ask goes up to 273.80. I don't know, hypothetically. So then now there's a higher bidder than you. So you're lowballing basically. So it's not guaranteed that you'll get it, but if you think that stock price will drop to your limit price, I mean, penny saved is a penny earned. Anyway, and then the duration, so you can set the limit order for the day, or you can set it for 60 days. So it won't expire for 60 days. If you're gonna do a limit order, I'd probably just do it for the day, unless you're like really looking far out in the future and you're trying to predict where the stock price might go and like what you'd be comfortable buying it at. So like for Duolingo's case, let's say I put in a, a limit order for $190 a share. As soon as the stock price hit 190, which was probably around here, it would have executed my trade if it was in that 60-day time frame. If I would have put it in here, 60 days passed, then it would have expired. Then I would have to put in a new limit order for it to execute on that day when it hit 190. But yeah, so limit orders are a way to like kind of try to save a little bit of money. Or like if spreads are ridiculously large, then you would you don't want to like overpay for a stock for no reason. But yeah, so there's the buyers that are willing to buy the stock. That's the highest that they're willing to buy it for right now, and there's the sellers, and that's the lowest that the sellers are willing to sell it for. And then volume, that's telling you how many shares have been traded throughout the day. So 23.7 million shares of Apple were traded today. And some people use volume as like indicators when it comes to investing. All I can say is it doesn't matter. It's all it's a facade. Um, but yeah, so like once you fill out all your stuff, I mean, yeah, you can do stop limits and stop orders as well. Do your own research on that. I don't ever use those. I don't like them. But um, so yeah, you can do market order, whatever. Boom. Preview. Oh yeah, and like if you want to, so most of the time, like you're gonna add funds to your account. Most of the time, it's gonna be it's gonna send me to. Oh, excuse me. Most of the time, you'll see um like portfolio or like transact or like trade. So like anytime you want to do anything in your portfolio, you're probably gonna see like a transact or like a portfolio or like an investing or like an account that you'll click on that to do basically anything that you need to do in your portfolio. But so like if you want to add money to your Vanguard account, just transfer cash. Well, you'll transact, transfer cash, and then like deposit or withdraw and go through that process. So like adding money to your accounts as well as um, executing trades on your accounts, it's basically the same concept across all of the brokerages. It's just it looks a little bit different because they got to seem a little bit different, But yeah, so that's kind of like how to go about getting set up with your brokerage. Um, and like also executing trades and adding funds to your account. But yeah, so what I would do is go ahead and get everything set up, get it ready to go. And in the meantime, while you're waiting for your account to get verified and everything, go through this process, pick some stocks that you might be interested in or like whatever, and then add them to a watch list. And then I would I would take 2 weeks, a month, and just watch instead of just like investing your money, just literally watch the stocks on your watch list and watch the way that they move. And another thing that I would do, I like Yahoo Finance a lot. Um, I I usually just do my watch list on Yahoo Finance because I get like articles and stuff. So when it comes to like researching in the markets, don't use these articles as like this is what you should do. Read these articles and then process the information, but then compare it to like your own thoughts and what you think and what you know and what you believe. Like gold silver plunge after rally. When it gets this stretched, be careful. Yeah, gold and silver have been flying because there's been so much uncertainty in the market within the past year with the tariffs and the credit market tightening and everything else that's been going on. The unemployment rate's been rising. Initial jobless claims have been pretty bad. Like there's so many factors to why gold and silver have been rising so much. Maybe this little plunge is just a little near the short-term correction for it to keep going up. I mean, I don't pay attention to gold that much, but I haven't read the article yet, and I'm already like thinking things in my mind. Like this is the type of thing that I do is just read these articles, think to myself, but my decisions are being made based off of this economic calendar. Like once you get to the point where you've done enough research on these events that happen, And literally, the only research you really need to do is just read these overviews, or if you have more questions, just doing more research. Like, how does X, Y, and Z affect the Chicago PMI? Things of that nature. I don't know. Whatever you're feeling. Initial jobless claim is what I was just talking about. And then, like, you can read it, do more research on it. You can click the release URL. It'll give you more information at the release URL as well. And then you can look at the history of the report and kind of compare the numbers to where they were earlier this year and where they are now. So here, as you can see, looks like it was kind of downtrending a little bit, and now it's starting to spike back up into this 220, 230 range for initial jobless claims just from August. It won't show me more for some reason, but yeah, like my investment decisions come based off of this. I factor in all of these things together and try to outweigh, you know, all these things have a certain weight on the fiscal policies for the Federal Reserve. So you got to know which ones the Federal Reserve rely on more compared to others. These little bull symbols here kind of give you an idea of that. The ones that are three affect more than the ones that are ones. They affect the market more. So, maybe the Fed uses those. It's kind of like it's set up for you already. Whoops. But yeah. So, um, just read, dude. Like, just do your research. Um, in the next video, we're gonna start going into like constructing a portfolio and things of that nature. Um, so we're gonna be going into like the asset allocation and things of that nature again. Um, but yeah, so really, it's just like there's a lot of information that you need to know, but if you're able to balance it all and have a pretty decent understanding of how some things affect other things, um, then you know you'll be better off in the end. But please just keep doing your own research. Be curious. Like the best way that you're gonna get better at this stuff is just being curious and just trying to learn. Be open minded. I mean, I'm learning stuff. I'm learning new things every day, and I've been doing this for the past 7 years. I've been researching and talking to mentors and collaborating with other people, and I'm learning things every day. Like there's so much to learn when it comes to finance. So like don't get discouraged. Like just keep going. Learn from your mistakes. Gain wisdom, you know. Learn from other people's mistakes. Like I would say this is probably one of the best things that you can do as like being an average person, I guess. Like if this isn't your profession, being able to like understand investing and financial literature and things of that nature, like as just like a regular person, not even in the profession, that's probably one of the best skills to have, I would say, personally. But yeah, um, like I said, you can't go wrong with whatever brokerage you go with. Um, they're all the same thing. If you have questions or concerns, let me know. I'll help you out. And yeah, go ahead and start constructing your watch list with, the discounted companies that we're looking for. Um, and just watch the movement of the stock price and use this economic calendar. Watch so like going through this, like the time here, that's when the report is being released. We narrow it down to the United States because that's the country that I care about. The impact. So this is gonna have a little bit of an impact on the markets. This one won't have as much of an impact. And then the actual is how much. So this is what the release was. The forecast is what analysts expected, and previous was what the last one was. So like going to the history, the last one was 2.4, revised from 1.9, I would assume. Yeah, that should say 2.4 there. Yeah, but just pay attention to when these reports are being released. Just check them out. See how the markets react. So like, oh yeah, I should probably explain this too while I'm here. So I don't even know. So like if you're using Yahoo Finance, which I really suggest you do, there's gonna be these things over here. These things over here are the indexes for the the stock exchanges. So like the S&P 500, this is a gauge of what the S&P 500 did today. So today the S&P 500 was down 0.06%, 6 bips. Um, which is really nothing. It didn't do anything. Past 5 days, it's up 0.29. Past month, it's up 1.33. So on. You get the gist. So, like, just watch this economic calendar, and then at the release time, watch to see how maybe this report affected the market as a whole, Released at 10 a.m. Or was that like right here? Started dropping a little bit, and then went back up, and then it dropped more. So, pending home sales going up. I don't think that really affects the market, but I don't know. But then, like when you add stocks to your watch list on Yahoo Finance, it will start giving you articles about that stock itself and like all the stocks in your well, on your watch list. So that's why I like Yahoo Finance because I mean, it does the same thing on the other ones as well. Like you can see articles about that company, but I don't know. I like Yahoo Finance a lot. Maybe I'm a little bit biased, but yeah. Um, so start making those watch lists. Start getting your brokerages set up. From here on out, we're going to be talking about constructing your portfolios and basically how to go about thinking and how to basically, um, I don't know what the word is I'm looking for. Start applying the things that we've learned to our investments. But yeah, so I hope you enjoyed. Sorry if this was a little long, and as well, sorry if there's a lot of blank space in this video. I'm just doing a lot of thinking. But yeah, so maybe one day I'll be to the point where I'm editing videos, but for now, this is what you're getting. So sorry about it. But yeah, so hope you enjoyed, and I will catch you in the next episode. Peace.